At Entrepreneur India, we meet hundreds of aspiring investors and entrepreneurs every month. And one of the most common questions we get is this: how do I know if this is the right project to invest in? Because the truth is, choosing the right business project isn't just about making money. It's about aligning with your goals, managing risk, and building something sustainable. In this video, we're going to walk you through a step-by-step framework we use internally to evaluate potential business investments. Whether you're a first-time investor or planning your next big move, this guide will help you make confident, calculated decisions. 1. Begin with clarity. Define your investment goals. Before you start scanning projects or reading pitch decks, ask yourself, what am I really trying to achieve with this investment? Are you looking for long-term capital appreciation, passive monthly income, a quick exit within 1 to 2 years, or maybe a strategic investment in a sector you're passionate about? This is what we call your investment intent. Now combine that with your risk tolerance. Are you someone who can handle high volatility? Or do you prefer steady, low-risk returns even if they grow slowly? Think of these two as your investment compass. Together, they help you filter out 90% of distractions and hone in on opportunities that truly match your personal vision. 2. Identify sectors with real growth potential. Now that you know what you're looking for, let's talk about where to look. The economy is constantly shifting. Entire industries rise and fall over decades, sometimes even faster. So you need to look for sectors that are not only trending, but also backed by long-term structural demand. As of now, some of the most promising sectors include green energy and clean technologies, driven by climate commitments and government policies; AI and automation, transforming industries from healthcare to logistics; healthcare innovation, especially telemedicine, biotech, and diagnostics; agri-tech and food processing, meeting growing demand with limited resources; sustainable packaging, replacing plastic and reducing environmental impact. But don't stop at headlines. Dig deeper. What specific problems are these sectors solving? Are there underserved regions, outdated systems, or inefficient supply chains? That's where the real gold lies. You're not just investing in a sector. You're investing in solutions that people genuinely need. 3. Evaluate the business model. Can it scale and sustain? Even in a growing sector, not every project is a good project. Here's what you need to ask. How does this business make money? Is the revenue recurring, or does it rely on one-off sales? What are the costs? And how easily can they be controlled? Can the business scale without needing 10x capital or infrastructure? Let's say the project sells organic snacks. That's trendy. But if they can't produce at scale or their margins are uncertain, the business might never break even. A great business model has a clear value proposition, what makes it unique, predictable income, the ability to grow sustainably without collapsing under its own weight. 4. Conduct due diligence, leave no stone unturned. This is where you shift from excitement to investigation. Review the entire business plan, not just the summary. You want to know who is the target customer, how are they reaching them, what are the milestones, strategies, and marketing roadmap. Then get into the numbers. Revenue trends, profit margins, cash flow cycles, any past debts or liabilities. But that's not all. Evaluate the team behind the project. What's their track record? Do they have experience in this domain? Can they actually execute this idea? And finally, analyze the competition. Is the market crowded? What's their differentiator? Can they defend their position? Due diligence isn't just about avoiding scams, it's about confirming that this idea has the legs to run. 5. Analyze the financial metrics, let numbers speak. You can be impressed by the pitch, the story, the founder, but never ignore the math. Focus on these 4 key indicators: ROI, return on investment, what return will you get, and in what time frame, payback period. How long before you get your money back? NPV, net present value. Are future earnings worth what you're putting in today? IRR, internal rate of return. How does this project compare to others in terms of profitability? These numbers give you a realistic picture of the actual potential. If they don't add up, walk away. It's better to miss an opportunity than to lose capital on a weak one. 6. Legal and regulatory framework. Don't skip the fine print. Legal issues are like landmines, easy to miss until it's too late. Before investing, understand the legal structure, LLP, PVT Ltd, etc. Check if all licenses, permits, and registrations are in place. Review partnership or shareholder agreements. Ensure the business complies with tax and regulatory obligations. If the project is promising, but the paperwork is a mess, that's a red flag. A legally sound foundation is non-negotiable. 7. Consult the right experts like us. You don't have to know everything, but you do need people who do. Bring in a financial advisor to vet projections, a lawyer to review contracts and clauses, an industry expert to provide insider perspective. These experts don't just protect your downside, they can also spot upside you may have missed. Smart investors don't gamble alone. They build a team. 8. Think long-term, match with your passion, time, and exit plan. Last but not least, think beyond numbers and documents. Ask yourself, does this project excite you? Does it align with your values or interests? Are you ready to invest not just money, but also time and attention? And what's your exit plan? Do you want to cash out in 3 years? Or build a legacy and stay for the long haul? Knowing how you want to exit helps you decide how you want to enter. The best investment isn't always the one with the loudest pitch or the fastest returns. It's the one that aligns with your goals, fits your risk profile, and shows clear potential to grow sustainably. So are you ready to build the future? Then let us assist you. We can support your business with 30+ year experience in supporting business with detailed techno-economic feasibility reports, market research reports, equipment and raw material specifications, process flow diagrams and manufacturing details, complete project financials and profitability analysis. Not just these, but we also support you with custom reports that's made for your needs. If you need to know more or in detail, you can contact us through the phone number or email provided in the description. If you liked this video, please subscribe and stay tuned for next video.